90% of people that trade the Forex markets lose money. I'm going to show you one of the best, if not the best scalping strategy in Forex to profit consistently and grow your account balance. Now, to understand the strategy, we will need two indicators. The first indicator will be the 100 moving average. Go inside indicators and strategies on tradingview.com and type in moving average. Once you have clicked on the moving average, you will have a line near the candlesticks. We need to change the length from 9 to 100. Go inside the settings icon, type in 100 length. Once you do that, click OK. And if you have done this successfully, you will have a 100 moving average line. Now we will repeat the same process once again. Indicators and strategies, type in RSI, and we will use stochastic RSI. Now once you have done this process, you should have stochastic RSI opened up on your charts. We will not change any settings at all. It will be all default. Now once we have everything set up, please open up Euro USD currency pair, because this scalping strategy works best in Forex when traded on Euro USD currency pair. We are also currently on the 1 minute time frame, which is also very important. Now to understand the strategy, we need to understand what the moving average is doing. So the 100 moving average is acting as a support zone. Every time candlesticks touch an area zone, it shoots towards the upside. This means that the buy pressure is currently strong, right? Every time it touched, it shot towards the upside. So the first, second, third and fourth touches were all bouncing back, and then eventually it started to break the 100 moving average with a strong push towards the downside. Now this push that we have is very important, but why? Because it crossed the 100 moving average. It recently was respecting the 100 moving average as a support area, right? It was the ground floor over here, shooting towards the upside every time it touches. Now that the candlesticks have broken this area of support, it becomes an area of resistance, right? So support becomes resistance. It shot towards the downside and then went back to retest the previous area of support, which is now resistance, right? So the previous area of support over here, where multiple times it was respected, becomes a resistance zone in this area over here. And the same concept happens, right? It's just the opposite direction. Every time it touches the 100 moving average, it shoots towards the downside. Once again, touches the moving average, shoots towards the downside. Touches the moving average, goes towards the downside, and so on. So now we know the market is reacting towards the 100 moving average, is trending towards the downside. We can mark a trend line. A simple way to do it is to find the spot where it touches the most. So if we just drag this trend over here, the market candlesticks have touched the trend line. Every time it touched, it shot towards the downside. It's also important to notice how the markets actually move. The markets always move with a push, exhaustion, push, exhaustion scenario. And the exhaustion usually happens in the previous area of sensitivity. Previous area of sensitivity means it's just support or resistance in a different way. So the same example I've just drawn, we can see over here. Push, exhaustion to the previous area of sensitivity, push again to the previous area of sensitivity. Yes, then it broke out a little bit, but it usually comes back to another area of sensitivity. That's why we have resistance 1, resistance 2. This is our first resistance that we expect the market to turn around, but we also know that the 100 moving average is around this area where more than likely the market will react, reach the area of resistance, the 100 moving average, and then again respect it and shoot towards the downside. As you can see, it went towards the downside. It also made a new lower low. What does that mean? This previous level over here is now lower than this area zone. So this means that the bearish pressure is definitely here to stay and probably trend towards the downside. So once again, we have a exhaustion towards the previous area of sensitivity, which is the area 100 moving average area, or we can just mark an area of resistance over here. Both will do great at this point, and it shoots towards the downside once again, making a new lower low, again trending towards the downside. Now that we understand what's going on with the market, we understand a little bit of price action now, we want to enter the trade. But where do we actually enter for a profitable trade? Well, technically there are two choices. We can follow this downtrend over here, maybe an exhaustion to the previous area of sensitivity, and then enter a trade with a bearish engulfing candle and then go down, or wait for the market to push towards the upside, have an exhaustion to the previous area of sensitivity, breaking the 100 moving average line, and then shoot towards the upside once again. Now, generally people will tell you follow the trend, but this is the 1 minute time frame. So if we just zoom out a little bit and have a look at the market, what is currently happening? It's actually on an overall uptrend. As you can see over here, it has been trending towards the upside pretty much the full single day over here. So the overall trend for a scalp trade would definitely be a buy. So now that we have established a overall trend and the bias is probably a better buy than a sell, we want to wait till the market breaks this area of trend line and then shoots towards the upside after having an exhaustion. So now let's just play the tool and let's see where the market takes us. So as you can see, it shoots towards the upside, and the downside has some sort of consolidation in this area zone, right? Now we can extend this square a little bit, and then we can change the trend a little bit as well. What do these candlesticks tell us? They show a lot of bullish pressure. So we had our support area over here, multiple touches. As you can see, 1 touch, 2, 3 touches. Every time it touched, it went towards the upside. So we know we have a pretty strong support for the 1 minute time frame. We also can mark an area of resistance, or an area of sensitivity, as I like to call it. As you can see, it was a nice area of sensitivity. If we just drag this across, multiple touches, pretty much showing a strong area of resistance. So the market has been in a little consolidation. However, it did break the 100 moving average multiple times in this case, and that's okay, because we know that the area of resistance needs to be broken before we enter a trade for a buy trade. So this is the resistance, this is the support zone. The market is consolidating, so we can't even rely on the 100 moving average, but we do know it has been broken, retested. So the market is currently consolidating, and we are waiting for a break towards the upside before we do anything else. So let's just see what the candlesticks actually do. They shoot towards the upside very nicely, and this is where we would ideally want to look for a trading opportunity after it breaks this area of resistance. So the area of resistance has now been broken. The resistance becomes support for all these candlesticks in this area, right? So now we have the support over here. We can just drag this along. This area of sensitivity is no longer valid. We don't need it since the price is over here. So let's just not confuse anyone and delete it. As I previously mentioned, markets move push, exhaustion, push scenario. So what's currently actually happening? We had a push, exhaustion, push, probably an exhaustion to the previous area of sensitivity where we will be looking to enter. So we haven't really identified yet an area of resistance, so we actually need to do that. If we have a look at previous data, this pretty much looks like a good area of resistance. This area of resistance is our new one that we aim to break once again for the maximum profit gain. So now, do we enter over here after push, exhaustion, push scenario with a bullish engulfing candlestick? Well, some people would enter over here, but I wouldn't, because the stochastic RSI has been overbought, which means that probably sell orders are gonna come in this area zone and push the market towards the downside to retest the previous area of sensitivity, which has now become a support zone. So let's see what the market actually has planned for us. So it shoots towards the upside very nicely. So as you can see, it actually broke the area of resistance that I mentioned. Once again, after a push exhaustion scenario, this becomes the new support. So this area is once again the new support. We need to wait for some sort of exhaustion. So push exhaustion scenario, we need to wait for the RSI to be oversold as well. So let's wait for that. Shoots towards the downside very nicely. As you can see, the RSI has been oversold. Can we enter this trade long? Well, we could enter this trade long because the 100 moving average has now been crossed for a while, trending towards the upside. RSI has been oversold, so we could potentially enter somewhere around this area zone. So if we do not get a bullish engulfing candle right away somewhere in around this area, we want to go inside the 2-minute time frame. As you can see, the 2-minute time frame is developing a bullish engulfing candlestick, which is also a stronger time frame because it has twice as much information than the 1-minute time frame. Shows a bullish engulfing candle. We can enter this trade long. We ignored the stochastic RSI indicator on the 2-minute time frame because we did not analyze our full trading idea on this time frame. We are only using the 2-minute time frame to find a confirmation candle, which is a bullish engulfing candlestick. The blue one, or the buying candle, is bigger than the selling candle, which means it engulfs it, and then we can enter the trade long. So as a scalper trader, you can't really have the best risk to reward ratio because you want to be in and out of the markets. The markets close within seconds. So this is very strict and disciplined trading, especially if you're trading Euro USD. It's the most complicated pair, yet it's the best scalping pair as well due to low commissions and spread rates within the brokerages. So now if we would enter this trade as a bearish engulfing candle following the nice uptrend that we have, let's go back to the 1-minute time frame. So we enter around this area zone. RSI has been oversold on the 1-minute time frame. We're trending towards the upside very nicely. So a push exhaustion push scenario very likely. We had our 2-minute confirmation candle, which is the bullish engulfing candle, and we can enter our trade long. And as you can see, we would have profited 3 pips only, which is generally nothing. But in scalping, throughout the day, you're going to be placing 20 trades, 30 trades, and 3 pips times 30 is 90 pips. So don't underestimate this strategy. It does work perfectly. I've done this myself multiple times and it works absolutely great. We can potentially just have a look what would actually happen with the markets. As you can see, it nearly touches our stop loss, shoots towards the upside very nicely. We could have potentially profited 4 pips. Not the greatest pip gain, as I said, but as a scalper, you're going to be trading multiple trades throughout the day. It's active trading, and I don't suggest scalping as a beginner trader because more than likely you will lose money if you don't know what you're doing. There are many better ways for beginners to learn Forex, become profitable and consistent, and not burn your account balance. So if you would like to check out some of my other content, you're more than welcome to. If you enjoyed this video, make sure to like, subscribe, hit the notification bell, and I'll see you guys later. Bye.